In this video, I'm revealing the SPY RSI cross strategy, a systematic approach that trades the SPY, the Spider S&P 500 ETF, that's delivered a 12.2% exposure adjusted return over 21 years and has a super simple entry rule. Stay tuned because I'm sharing the exact entry and exit rules with zero guesswork. This strategy trades SPY on a daily time frame and only takes long positions. I've put together a comprehensive strategy guide you can download completely free. The link is in the description below. First, let's check out the backtest result. We tested this strategy from January 2nd, 2004 to January 31st, 2025. That's 21 years of data. Here are the key stats. We have a total return of 1.4x, which equates to an annualized rate of return of 4.3%, an ROR over the last 5 years of 8.6%, a Sharpe ratio of 0.63, a maximum drawdown of minus 15.2%, that is the largest peak to trough fall, a MAR ratio, which is the rate of return divided by the maximum drawdown of 0.29, an average exposure of 35.5% in the market, an exposure adjusted return of 12.2%, and over these 21 years, we have 173 trades for an average of about 8 trades a year, an expectancy or average trade return of 0.54%, a profit factor of 1.89, a relatively high win rate of 68.2%, an average win of 1.8% versus an average loss of 2.1%, and an average win length of 11 trading days versus an average loss length of also 11 trading days. This is the equity curve of the strategy. You notice that it's on a fairly smooth upward slope with some flattish periods. This table presents yearly and monthly percentage returns along with total annual returns and annual maximum drawdowns. Here are the key takeaways. We have the highest annual return in 2013 of 17.7% and the worst annual return in 2011 of minus 11.5%. 14 out of the 21 completed years had positive returns. This strategy has a maximum drawdown of minus 15.2%, which represents the largest peak to trough decline during the backtest period, which happened in 2013. Let's dive into the entry rules. We have a super simple entry rule where we enter long when the 14-day RSI crosses above 60. Next, we need to know when to exit. We exit when the 14-day RSI crosses below 40, or if we hit the profit target of 3 times the 14-day ATR above the entry price. Finally, we have a time-based exit where we exit after 12 bars if neither the exit rule or profit target is triggered. For a realistic backtest, we include transaction costs of a commission of the higher of $1 or 0.5 cents per share, which is the default interactive brokers commission. We also include a slippage of 1 tick for stop orders, but as this strategy does not have any stop orders, it is not relevant in this case. These transaction cost assumptions help ensure our results are closer to what you'd experience in live trading. Now let's take a look at what some of the entries and exits look like. Here we have a take profit example. In this example, the entry rule where the 14-day RSI crosses above 60 is met and we go long. In this case, the price moves up after entry and hits the profit target for a gain of 3.33%. Here we have an exit rule example. This example trade shows that after entry, the 14-day RSI crossed below 40 and the position is closed, resulting in a 2.13% loss. Finally, we show an example trade based on the time stop. After entry, neither the RSI exit or the profit target is reached within 12 bars, and the position is closed, resulting in a 1.18% gain. So what's next? We're moving into forward testing, tracking live market performance to see how the SPY RSI cross strategy holds up. We'll be updating the performance of this strategy on a monthly basis. If you want to follow along, make sure to subscribe. While a 4.3% annual return might not sound revolutionary on its own, this strategy is designed as a building block in our Holy Grail portfolio, which we'll be putting together shortly. When combined with other low correlation strategies that we have reviewed, we'll be targeting double the annual returns of the S&P 500 with less than half the maximum drawdown and a smoother equity curve that lets you sleep well at night. If you found this video valuable and want to follow along, do these three things. Download the strategy guide using the link in the description below. Subscribe and hit the notification bell to catch our new strategy reviews and monthly performance updates. And share your thoughts in the comments. I personally read and respond to everyone. For those who want to go deeper, I'm sharing exclusive strategies through my newsletter at grailwealth.com, and you can connect with me directly on X at grailwealth. See you in the next video, where we will review version 1 of our Holy Grail portfolio. Until then, happy trading.